Chapter 8 Trading Sessions and Market Timing. Section 3 Asian Session. The Asian session is usually the quietest stretch of the Forex day, but it still matters a lot. It generally runs from about 00 to 00 to 900 GMT, with Tokyo as the main hub, then Hong Kong and Singapore adding liquidity later while Sydney gradually fades. Even when price action is calmer, this session often sets important levels that traders watch for the rest of the day. Price behavior here often feels slower and more contained than it does in London or New York. Volatility is usually lower, ranges tend to be tighter, and trends often take longer to develop. That also means an early move can look promising, then lose momentum before it turns into anything meaningful. Because conditions are often quieter, many traders do better by staying patient instead of chasing fast moves. Range trading around support and resistance can work well, and some traders use this time to prepare for breakouts later in the day. If news from Japan or Australia is due, waiting for confirmation before entering becomes even more important. The most active pairs during these hours are usually the ones tied closely to Japan and the Asia-Pacific region. Yen pairs often lead, especially USD-JPY, while Euro/JPY and GBP/JPY can also offer solid movement. USD is another pair to watch, particularly when Australian data or central bank headlines are on the calendar. Japan and Australia matter because their data releases and central bank comments can move prices quickly when overall liquidity is still relatively light. Japanese numbers can shift yen pairs fast, and remarks from the Bank of Japan can change market sentiment in a hurry. The same is true for Australian data and Reserve Bank of Australia communication, especially for AUD pairs. The session tends to unfold in stages rather than all at once. Around 0000 GMT, Tokyo opens and yen pairs begin to wake up. Between about 00 and 00 GMT, Japanese data can become the main driver. Liquidity often improves from roughly 00 to 600 to 06 00 GMT as more regional markets join. Then activity usually starts to slow again before Europe takes over. One of the biggest traps during Asian hours is the false breakout. Thin liquidity can make a move through support or resistance look stronger than it really is, only for price to reverse once deeper participation arrives. That's why many traders want to see confirmation, not just the first break of a key level. Imagine Japan's CPI comes in stronger than expected, and USD-JPY drops from 110.20 through the 110.00 level to 199.80. A trader sells the break at 199.95, expecting follow-through, but the move doesn't hold and price rebounds to 110.10, triggering a stop-out. The lesson is simple. The news may be real, but the first reaction in lighter liquidity is not always reliable. A simple chart review can teach you a lot about how the Asian session behaves. Mark the session high and low. Note when they formed and measure the total range in pips. Then compare that range with recent Asian sessions and check whether a news release helps explain why the move was wider or narrower than usual. The Asian session can feel calm, but calm does not mean risk-free. Common mistakes include trusting every breakout, ignoring the economic calendar, using too much leverage, trading illiquid pairs at the wrong time, and placing stops too close. Good discipline still matters here, because thin liquidity and important session levels can have a big effect later when London steps in.